Hello students, I am Narsimlu, Commerce teacher working in Telangana State Model School and Junior College. Today I am going to teach you CC First Year Accountancy Unit 1 Chapter 2 Part 2. This is the second video. 3 types of accounts. Application of the personal account or principal. So in this video I will explain 3 types of accounts and their principles and practical application of personal account principle while recording the business transactions in the books of accounts. Now, types of accounts. Students, there are 3 types of accounts in accountancy with debit and credit rules. So those are called golden rules of accounting. See, golden accounting principles. A rule for debit and credit. Personal account. So what is the personal account? Personal account consists of names of persons and institutions, organizations. For example, Rama and SBI, Bank, ABC, Company, other institutions. All these are the names of institutions and individuals. So when there is the name of a person or institution or organization, then that can be taken under personal account. So here personal account principle is that debit the receiver, credit the giver. So what is the personal account principle? Debit the receiver, credit the giver. Okay children, this is the personal account principle. So what consists the personal account? Personal account consists of names of persons and institutions and organizations. Okay, so students, right, second account, a real account. So real account consists of assets and cash. So in the real account, generally what we consider the assets and cash. So real account principle. What is the real account principle? Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. Students, here suppose you purchase a computer. When you purchase the computer, is the computer coming into the business or going out of the business? Answer to my question, whether the computer comes into the business or goes out of the business. Yes, your answer is correct. When we purchase the computer comes into the business, then that asset, computer account, should be debited. For example, you sold a furniture. So when you sold the furniture, you ask yourself one question, whether the furniture comes into the business or goes out of the business. So here when you sell the furniture goes out of the business. So as per the real account principle, that account should be credited. What goes out, that should be credited. Credit what goes out. Okay, 2 principles we completed. First one, personal account principle. Second one, real account principle. And come to third one, nominal account. Debit all expenses and losses and credit all incomes and gains. So as per this nominal account, so in the nominal account consists of incomes, revenues, gains, losses, expenses, costs. So all these comes under nominal account. So nominal account principle is, what is the nominal account principle here? Debit all the expenses and losses, credit all the incomes and gains. So for example, you paid salaries of rupees 10,000. So salary is an expenditure to the business organization. So that expenditure, salary account should be debited. What goes out of the business when you paid the salary? Cash. Cash comes under real account. So as per the real account, when the cash goes out of the business, that should be credited. Okay, similarly credit all the incomes and revenues. So suppose you received interest on a bank deposit. You deposited some amount with the bank. On the deposit you are getting some interest. So when you are getting some interest on your deposit, that should be credited. And interest on deposit account, credit. Its opposite account must be cash. And simply one thing you have to keep in your mind, that is important one. So if expenses comes in the debit side, its opposite account either cash or bank account. Its opposite account will be either cash or bank account. Similarly, if the income you received, the income account should be credited in its opposite account. Generally it would be cash or bank account. Okay students, now so how many types of accounts are there? 3 types of accounts. What are the 3 types of accounts? One is personal account, second one real account, third one nominal account. I hope children you understood 3 types of accounts.